right. Slow down a bit. Okay. So we got a little bit of time. I did this last time. Give me a couple of seconds while this come on, baby.
Now, when your company do this, how many are in your company? It's just me for now. It's just you? Yes. You do a lot. Yeah.
You don't know what a macro is?
No, it's on the wall, but I don't know where it's.
Oh, Canvas. Oh, yeah, I use Canvas.
Right. So our other sponsors who couldn't make it, we had two other sponsors. One was Shad Hammonds. I think a lot of you know Shad. So he is a lender with Loan Depot. Okay, so he's one. And our other guy was Corwin from Core Inspections. So if you guys need an inspector, please frequent our sponsors. Okay.
Oh, very good.
Yes.
Reliable.
Yes. Very reliable.
And
Yes.
do you have good experiences?
I don't. I
Okay,
don't.
that's all right.
But what I'll do is I'll shoot you his information. Okay. All right. So we're going to get started. Again, I'm Khalid Nathan Aleem, and what I wanted to talk to you guys today was about implementing the Profit First real estate for real estate agents. Profit First. Has anybody heard of the Profit First accounting system? Okay. Great. All right. So this is again, how do real estate agents stop living from commission check to commission check? Because all of us know matter of fact. No, that was too far. Okay. So here's the cycle of the real estate agent. Okay. We have the highs. The agent sells a home, experiences a windfall of money, and indulges in the high life. Okay. I'm sure everybody here can relate. Okay. So then after you do that, then what happens? Living and business starts to set in. Okay. Agent uses his money for what? His needs. He uses it for his rent or his mortgage, his transportation, his food, his wants, the movies, the gym, baby's clothes. And he also uses it for marketing, leads, and his desk fees. Okay. So it's all big one pile. Okay. And then what happens after that? Maybe he goes through COVID, or maybe he goes through a dry spell. And so when he hits a dry patch, he starts accumulating debt. So I'm sure some of us have used credit cards to kind of get by. I don't know who in there has it. Don't tell me, but people still use e-commission where they charge you what, like 20 or 30% of your commissions. Hey, how you doing? And that fosters what? Financial instability. So that just kind of sets in. So it's like as a real estate agent, we're like kind of all over the place. Okay. There's really no metric in maintaining your business. And then we come with the lows. Okay. So we have constant financial pressure, inability to plan for the future. All right. How does one plan for the future? This accounting system, Profit First, this is something. There's a book called Profit First, okay? And this guy came up with this accounting system for business owners. The thing about being an agent is most of us don't run our business like a business owner, okay? What we kind of do is a lot of us, we come from working for somebody, and then we kind of work for ourselves. And a lot of times we're working in the business, okay? Not on the business. This is one of the activities where somebody should work on the business, okay? All right, so the Profit First system solution, we're going to start right here. We're going to invert the formula, okay? Because the old formula was what? We have the income minus expenses equals profit, okay? So these expenses would come out first, and then whatever's left is what we would get. And that keeps us on the hamster wheel. How does a person know if their business is doing good? Because it's all in one particular giant basket. Okay. So what he actually did is he flipped it. You have income which is the commission check. You take out the profit first, and then what's left over is for your expenses. Okay? This is the old adage of what? Pay yourself first. Okay? Pay yourself first. And he actually got this from, I don't know anybody in our culture that really does this, but back in the day, I guess they used to do envelope systems. Okay, so maybe your grandmother or your great grandmother would have envelopes, and this envelope would be for the mortgage, and this envelope would be for the food, and this envelope would be for the movies. Okay, it's the same thing. It's the same thing. Okay, but what they did is they I don't want to say they modernized it. Okay, so what do? You set up sequential bank accounts. Okay, and you divide them. You divide them into 5 different accounts. You have your holding account, you have your profit account, you have your owner's compensation account, you have your tax account, and you have your operating expenses account. I'm going to explain what all of those are, okay? So when you set those up, when you divide them, you're going to allocate certain percentages to them for each commission check. So that commission check that you get, you're just not going to go and run to the casinos in Chester or in Jersey, okay? You're going to take that check, and that check is going to get allocated to different bank accounts, all right? And these different bank accounts have different meanings, okay? So let's go into the next one. All right, this is the meat and potatoes, okay? So here are the different bank accounts. You have 5 bank accounts, all right? The first one is holdings. That's where all the money goes, okay? So this is the holding account. So this is where all the money goes. Then what happens is you allocate 5%, and these percentages are arbitrary, okay? So you can change them based on your like, okay? But this is what I do, all right? The holding account gets 100%. Then you break out 5% for profit, okay? You break out 50% for owner's compensation. And again, I'll break these down as far as the definitions for them. And then 15 for taxes, 15%. And then you'll have 30% for operation expenses, okay? So this is the breakdown of the 5 accounts, all right? Hello. Okay, so here's where the rubber meets the road at, okay? So here are the account meanings, all right? So just say that you had a commission check for $10,000, okay? You have the commission check for $10,000. $10,000, the entire check is going to go to your holding account, okay? Now, $500 is going to go to your profit account. With this profit account, every quarter, this account is distributed to you as a bonus, okay? So this is going to be, you don't touch this. So at the beginning of every quarter, for example, January just hit, you would take this out, okay? Then the third one would be your owner's compensation, all right? That's 50%. So you use this money to live. So you use this money for your mortgage, your car payment, your groceries, your day-to-day living, okay? You put 50% in it for that, okay? Now, what's going to happen is a lot of people are going to live according to how much money comes in. If you got $100,000, if you make $100,000 a year, that's how you're going to live. If you make $200,000 a year, that's how you're going to live. If you're going to make, if you made $1 million, that's how you're going to live. So your lifestyle is going to morph to the money that you make. Okay, so you're going to put 50% in your owner's compensation. Number 4 is taxes. Now, of course, Uncle Sam, this is your partner. If you're like me, before I implemented this stuff, before I implemented the profit first, at taxes, I didn't have anything stored away for Uncle Sam. I just kind of flew by the seat of my pants, okay? But with each commission check, you're putting away 15% for Uncle Sam, and you don't touch this money, okay? Because this is not your money, all right? It's Uncle Sam's money. Now, I'm sure my mic's still on. Now, if it comes tax time and you have, for example, $30,000 in there and your taxes come and you only got to give $10,000, okay, you take the rest, okay? but you want to make sure that you have something put away for Uncle Sam so that it's not a stressful time. Okay. Um, and then this is probably the most important for all of us is operating income. All right. This should be expenses. All right. This is monies that you'll do to fund your real estate business. Okay. So you'll put 30% in your operation expenses for your real estate business. All right. This is probably to me the most important because sometimes life may happen. You know, life be lifing. Okay. life be life right. Life be lifing. Okay. So it's like you will want to grab some money from this bucket, okay, but you can't. This needs to be allocated towards your business, buying marketing supplies, buying leads if you're doing realtor.com or Zillow, desk fees, whatever. Okay. And for people like myself who are frugal, it's like you don't want to spend a lot of money here and there, but you have to spend it here. So you got to find ways to spend this. And what a lot of us do is we kind of try to hold on to our money and don't put money into marketing. If you look at every business, they have a budget for marketing. But real estate agents, because it's so close to the vest, it's like, okay, we'll do it when we can. No, this makes you allocate money towards marketing or just your business in general, and it makes you spend money on your business, which a lot of us don't do. Okay, so this is kind of the breakup. Again, you can fix the allocations depending on your personal field, but this is what I found would be the most beneficial. Okay, this is the last slide. So ways to implement the profit first. Okay, you can use physical envelopes. If anybody still carries around cash, I know I don't, but if somebody carries around cash, you keep money in your mattress, you can still use envelopes if you want. Okay. The second thing you can do is you can open up separate checking accounts at your current bank. Okay. To me, this is messy. Okay. It's messy. And the reason is because some charge you. Some charge you per account. Now, for example, Citizens they don't charge you for business checking, but a lot do, and it depends on how much you have for some of them if they charge you or not. Okay, so with this particular one, you would have to find a bank that doesn't charge you like I said, like Citizens. Okay, but this bank right here is one that I stumbled on about a year ago. Okay, it's Rely, but this is the URL, relyfi.com. And with this, they give you all the accounts that you want. And you can have your commission check go right into one account, and it automatically disperses it out to the other accounts. And it's all free. It's all free. And they do it all like it's a bank account set up for the Profit First system. Okay. And again, like I said, I found this out about a year ago and I was ecstatic because it does it all free. So if you go to www.relayfi.com, like I said, and you may want to watch some YouTube videos on it first. Okay. Just to see how it goes.
Do they have an actual headquarters or are they just
In the cloud.
In the cloud. Right.
Like, remember the orange one?
Yeah, ING.
Yes.
Right. They're in the cloud. I mean, just not to get into the woods, but they're actually a technological company where they use the actual bank to do. So it's seamless, but they're not the actual bank. Okay, they use a bank to do the transactions. But again, they have a routing number, tracking number, and you can have as many bank accounts as you want, and it's all free. And you can move money and do all of that online. Okay, so I think that is it. Does anybody have any questions?
Really good. One thing about these accounts that are in the cloud.
Mm-hmm.
How do you ever really access, like, say, if you need to pull out physical money?
Mm-hmm. Debit card.
They have debit card.
Mm-hmm.
Debit card, or you can wire it to another account.
Right.
That you haven't have a debit card for.
Right. But they have I have a Relay debit card. So, and they don't have a bank, but what do they call it? All point ATM machines that you see in like 7-Eleven. It's All Point, right? Yeah, they use All Point, and you get free charge. So and All Points like 7-Eleven, not Wawa, but 7-Eleven and convenience stores like that. Anybody else have any questions?
Are they insured?
Yes, yes. So your money isn't insured just like any other bank. All right. All right, that's me. So now what I'm going to have is our special guest, Dave Foster from Integrity Realty. Brought him here because I wanted you guys to learn a little bit more about short sales. So,
And may I say,
sure.
this is wonderful because I got my short sale foreclosure certificate.
Oh, awesome. So we're going to have to bring you back next time.
Excited.
Right. I'm going to have to bring you back next time. Oh, yeah.
I was looking forward to this.
You start this.
Yes. Somebody was on the radio, a Dr. Morris's birthday was 13.
You recording? You recording? Oh, okay. All right. Hello, everybody. My name is Dave Foster. I'm a licensed realtor for the last 15 years. I invest. I've done short sales, commercial properties, property management, everything in real estate I've done or I'm doing right now. He wanted me to put on a presentation for short sales. Short sales is something that I fell into when I first got into the business in about 08 or 09. Basically, the market was in the tank. I don't know what I was doing. And someone said, hey, do you want to do a short sale? And I got beat up really, really bad. And on top of that, it was a friend of mine's house that he came to me too late. He came to me 6 months and asked me about it, and then came to me 6 months later when it had already happened. So I'm like, I was at a handicap already, but what did I know? I jumped into it. But I took that as something that I really wanted to learn because I hate losing. So I took the time. I got certified to become a short sale foreclosure specialist. And since then, I've done many, many, many short sales. And it's a good source of business for agents to have in their pipeline. They don't close fast, but they are good to have. 2 or 3, just moseying on along. So I'm gonna go through everything that I know about. If you have any questions, just stop me to go over it. But I'm gonna go from how to do a short sale, where to find short sales, and how to facilitate them.
I have an idea where you find it.
That's good. Let's see if one of them is on there.
Friends and family.
Absolutely. Absolutely. So we're going to how to fill your pipeline with short sales, and it's a good source of business to have. We're all in this business, and everyone said they like working with buyers, but I think the key to this business is listing to last. Listings are always way better than having more buyers. If I gave you 20 buyers, could you work them all?
No way.
But if I gave you 20 listings, can you work them all?
Yes.
Absolutely. So list to last. Anyone know what a short sale is?
Oh, yeah, it's a loan that's underwater.
Right. So basically,
And the bank is,
Mhm.
the bank is giving the owner the opportunity to sell it before they go into foreclosure.
Absolutely, the bank actually
And the
tell.
bank has to approve that short sale. I had to tell you all, I was a mortgage underwriter, and I underwrote short sales. Some of them continue, said they take a while. I've had them take almost 5 years. So you've got to be truthful and honest with your, anybody wants to buy one of these. Go right ahead.
All right, Tony's going to be our next speaker.
So basically, a short sale is when someone has a mortgage. Let's say they owe 200,000 on it, but the house is not worth 200,000. It's only worth about 100,000. The bank is willing to negotiate and say, okay, we really don't want the house, which they don't. Banks are not in the business to have real estate. They're in the business of having money. So the first line of defense, they're going to say, hey, go contact a local real estate agent and have them do a short sale. And most of the time, people don't know what a short sale. So I'm going to give you one of my secret sauces on how I get a lot of short sales. And most people don't understand it. So a short sale is basically a transaction in which the lender or lenders agree to accept less than the mortgage amount owed by the current homeowner. In some cases, the difference is forgiven by a lender. This is a very important part when you're doing a short sale because sometimes they do forgive and sometimes they don't. You have to know when that is happening because it's going to fall on your client. And the owner must make arrangement with the lender to settle the remainder of the debt. All right, so I think my battery died. Yeah. Oh, come on. All right. So how to find short sales? Connect with like-minded investors. Investors are a good source of finding leads. Anyone know why investors are a good source of leads for finding short sales? Because they're always out looking for houses, and sometimes they may ask a person, "Hey, do you want to sell your house?" And then they like, "Yeah, sure, I'll sell you my house." And they give them a number. But when they get to the bank like, "No, you owe way more than that." The investor don't know what to do with it. So you can be a good help to help the investor by getting a listing, actually getting a double bubble, dual agency, and close the deal. Work with investor-friendly real estate agents. Myself, sometimes I facilitate short sales from different states because I have a short sale company. So 4 states that I'm in daily: New Jersey, Delaware, Pennsylvania, and Florida. I'm always talking to other agents. Hey, if you have a short sale, let me know. I can facilitate it. You can get the commission, and we can go from there. That's a good source right there. Search public records. Anyone know how to search public records to figure out how a property or if a property is a short sale or if it's in a pre-foreclosure? Public records. The city of Philadelphia, if you go to City Hall and you can search for lis pendants or notice of defaults. That is the beginning of a pre-foreclosure, which turns into a short sale. Usually the owner get what's called an Act 35, I think it's called, or Act 90. Act 91, yeah, 91. Act 91, and basically they usually throw it away and they act like they didn't see it come in the mail. But it's still going on. The bank is still moving forward. They're hiring attorneys to move forward with the PropStream. Anyone use PropStream? PropStream is real good. This is an online platform that you become a member and you can get pre-foreclosures sent right to your inbox if you pay the subscription fee. RedX. Anyone buy data from RedX? RedX is a good source to for foreclosures. You can get a lot of different stuff. I only deal with for pre-foreclosures. You can buy the data. So I was getting names, numbers. I was cold calling. I was door knocking. I was doing everything. Yes, I would knock on your door. And I want to say the bad part, but sometimes you would have to knock on people's doors that you may know. But you have to learn how to get over that hurdle and say, let me help you get out of this situation. NAR, RPR, how many people use that? Anyone know how to look up pre-foreclosures? Exactly. Their data is not as fresh as RedX and PropStream, but you can start from there. It's a good place to start. Visit your local courthouse, list pendants, and notice of defaults. each county, state is different to figure out how they do it. But once you figure it out, Philly, last time I was down there, I think they was charging like a couple dollars to get the file, and they don't make copies. You got to handwrite it. They like really in the past. Yeah, but it's a good source. I mean, if you ain't got no business, advertise your services. How can you advertise your short sale services?
I was going to ask you as another source, could you, or is it ethical for you to go to the places where these people go to get their counseling?
Yes and no.
So,
So
the counseling agency knew
the CDCs,
available,
yeah, the CDCs in the city of Philadelphia.
Urban League, whatever, whatever.
I don't think so. I'm gonna tell you why. I work with a lot of real estate attorneys in the city, and they actually refer me out to the CDCs because I'm proficient with the short sales.
Right.
And sometimes they'll call me. It's people at City Hall that call me like, "Hey, we don't want them to go to a wholesaler. We rather them come to you because we heard that you'll get the short sale done correctly." A short story: wholesalers are a good source for me, and the really bad wholesalers are really a good source for me. I'm gonna tell you why. So I had a guy call me on a Thursday night. He said, "Hey, I want to sell my house." I said, "Okay, it's Thursday night. I'm home chilling." I said, "Okay, that's cool. But I have to sell it tonight or tomorrow." I'm like, "Oh." I said, that's very nice. I'm home. You know, I might come out tomorrow. I can come look at the house, blah, blah, blah. So make a long story short, the wholesaler had the property under contract, told them they was going to buy the property, and Friday that day it was going to go to sheriff's sale. So I'm like, listen, I can't do nothing tonight. I said when I come out tomorrow, I'll stop by. I went by, checked it out. He told me what was happening. I was able to get a listing contract. I was able to get a buyer. I was able to get everything executed. Listing, a sales contract, and contacted the bank. And I was able to stop the sheriff's sale, do the short sale. It wasn't a short sale. I was able to give him a little bit more where he had enough money to go into another place. So a lot of these janky wholesalers are a good source because they have no clue what they're doing. They just have the property under contract and they like, I'm going to get this money, but it doesn't add up right.
Just real quick. In the past, I've used a platform called Lane Guide, which has a $150 a year fee for it, but it's the largest database in the country that has. You can get lenders' information. You can get asset managers' information and things like that.
Asset manager, right.
And I did that years ago on a property in Cinnaminson that was for sale for a year, and I ended up all day calling this phone number. The guy was out in California. First thing,
Lane Guide.
Yeah.
LAN.
LANE guide.
Okay, got it.
So long story short, I ended up telling him that house wasn't worth what they were selling it for. He wanted it off of his portfolio because he was the actual owner of the property, the asset. I got the listing, sold it in 2 weeks, and then his asset manager sent me 4 properties after that.
Nice. Yeah, if you get in contact with the asset managers, they're a really good connection to have. I have one that I work with from California, and I basically got mine the same way, and they just started sending me properties. So advertise yourself. How can you advertise yourself that, hey, I'm proficient in short sales? Social media. You just got the designation, correct? Which designation was it?
Oh, SFR and ABR.
Yeah.
So on the National Association of Realtors, they have a lot of on the website, they have a lot of already pre-done advertised things that you can use. You can customize them to yourself.
Yeah. So this is
that's my thing, right?
Yeah, this is what you can go to. This is actually a destination short sale foreclosure resource, and you can actually use this logo along with your R or whatever other designations you have. But that helped me out. But this right here was a flyer that I made 10 years ago, and I paid $25 for it, and I probably made at least 15 to 20 grand off of it. You know why? I put this in my social media marketing campaign.
Yes.
The average person who pays their mortgage every month have no clue what this is and probably don't even look at it. However, that person who has not paid their mortgage in 30, 60, 90 days, when they see short sale and I can help, they pick up the phone and call me.
Oh, yeah.
And I've had many leads coming off of this. And I still use this flyer to this day.
What do you think about the flyers that you get from the SFR site?
I've never looked at them. I kind of do a lot of my own creating of flyers.
That look kind of like that. That's why.
Oh, yeah. I just make my own. Actually, this wording right here, I got this from watching TV one night, and it was an infomercial for short sales. And I took a snapshot of it, and I said, hey, my graphic designer, I want to use this, and he designed this for me, and I've been using it ever since. Yeah. So advertise yourself. Learn how to do a short sale proficiently, and it's going to be a good source of leads to come in. It's not going to be all the time, but them slow months when things not going well. I got a short sale that I've had for probably 2.5 years. I just got the right number, and we're going to talk about the ins and outs. I got the right number, and I'm going to be able to close the deal. But I've been working on it for 2.5 years, and it's not a lot of work. Once you do the upfront work, the back end is really, really easy. And we're going to tell you, working with a title company, how you can get this done.
With the same buyer throughout the whole process?
Yeah, she went MIA on me for about a year or something, then she popped back up, asking me, did I sell the house yet? I'm just like, I've been waiting for you. And then that was one part. And then the second part is I argue back and forth with the lender, the asset manager, that the price that they wanted wasn't it. And they still didn't budge. But that's when you're dealing with a short sale. You have to fight for your clients the same way you fight for your clients if you represent a buyer or seller. We're going to talk about that. How to prepare for a short sale. List the property. List the property and collect all the correct documents. Following what I usually do is certain banks ask for certain things. It's usually the same, but it may be in a different way. Wells Fargo have a whole packet you need to fill out. Some banks don't have it. You have to make sure you collect the correct documents in order to submit it. Because if you don't, it's only going to prolong it. And remember, I said it's a short sale, but it take a long time. But if you are upfront and get all your documents uploaded, it's going to be downhill. You're just looking for the right offer. Ask the lender. Your lender requires several documents. The document, hardship letter. Why do we need a hardship letter?
So that you can get approved for a short sale.
The reason why you ask for a hardship letter, because the bank don't want to hear, I just want to sell my house as a short sale. They want to know, what is your hardship? This is the part that is going to get you through the door. Your hardship is, I was married and my wife ran off with her boyfriend in Mexico, and it's only my salary paying the mortgage. That's a hardship. Your hardship can't be, I got a new Benz and I didn't pay my mortgage. So hardship letters are something you need to sit down and talk to your seller about. What's going on? And you have to be transparent. Tell me what's going on. How did you get behind? Was it COVID? Okay, cool. COVID. You lost your job. These are the things that need to go in that letter. You want to get a copy of the purchase and the listing contract. You want to list the house at a fair market price. It's funny. I bet you if you pull up the MLS right now, you're going to see at least 100 short sales on the market. They've been on the market for at least a year. You know why they've been on the market for a year? No, it's because the agent don't know what they're doing. They're listening as a regular listing. Oh, this price is worth $300,000. But then you got to look at, is it a distressed property? Is it a short sale? Short sale should not be on that long. But my situation is a little different. I'm dealing back and forth with the bank. But right now, if you go to my listing and I get a lot of calls and a lot of showings, I'm like, hey, listen, it's listed for 97. The approved short sale is 94. I have 6 liens and judgments I need to pay off. Go to the listing, go to the document section, and the HUD-1 that's there is exactly how your HUD-1 should look if you want this deal to happen. I know my numbers from back and forth. If someone called me, I can tell them. But most of the time, these short sales have not even went through none of this. They just up there for 300,000, 400,000, which you're doing a disservice to your client because you don't know what you're doing. So I look at them all the time. Another source that I didn't put on, it just came to mind, short sale expired listings. It sits on the market because they don't know what they're doing. So if you wait till it expire, you do your due diligence, you get the homeowner name and number, and you know how to communicate with them. Hey, listen, I see it's a short sale. No, your house shouldn't have been listed at 350,000. It should have been at 200,000. But my house is worth this. You have to have a real heart to heart with the seller. Your house is not worth that much. You lived in it for 22 years. You paid mortgage for 10 years. You ain't paid, you got to just really go in and get them to come down. And then once you get the listing, that's when you go to work and do what you need to do. When I don't have nothing to do nowadays, I'm very busy. I actually just go through and look and see, hey, let me call this person up to get a new listing. It's a great source. Proof of income and assets. Two ways. Proof of income for the buyer, for the seller. They're going to want to see your taxes, your bank statements. They are going to pry into your stuff. They're not just giving short sales away. As a matter of fact, it's getting harder. They want to look at everything. They're going to make you fill out an RMA. Basically, that's saying all of how much you make and all of your bills, everything. Copies of your income tax for the last 2 years. They're going to look at. So there's no hiding stuff. All right, do your due diligence. This is where the title company come in, and this is a very crucial part of the short sale. Once I get the listing, before I even take an offer, I'm going to go to the title company. I'm going to say, I need a full title ran on this property. I need to know everything. Who they owe, what they owe. I need everything. You guys deal with the short sales and...
Yeah.
All right.
Sometimes, yeah.
So when you're working with a title company, I prefer to work with someone that I have a relationship. The reason why is because they're looking at it as, oh, we're closing in 30 days. No, we're not closing. I need you to get my stuff up and back over to me so I can look at it. Anyone know how to fill out a HUD-1 on their own?
Oh, yeah.
She's the only one? Two? Okay. That is a skill that you need. The title company is going to help, but the title companies are very busy because they're trying to close. And this is something that you, as the individual, have to know what to do. I actually have a copy of a blank HUD-1. And remember, I just told you that my listing, if you go to my listing, you can pull a HUD-1 and they show you how it needs to look. You need to know how to balance out the HUD-1. And the reason why is because it may be 3 mortgages, which I've done a short sale that had 3 mortgages on it, and I was able to close it out. You got to look at the first mortgage. Okay, how much are you going to allow this to go for? 50,000. The second mortgage say they want 25,000. You have to add all of this stuff on a HUD-1. You can't do none of that without knowing what the mortgage payoffs or what the short sale is, but then also from the title company, what are the liens and judgments? I've dealt with $22,000 American Express bills. American Express want their money. They said, we don't care about no short, nothing. They wanted their money. So I said, all right, listen, we can do this short sale, but we got to get them 20,000. We got to pay the mortgage, and we got to do this. It's kind of like a puzzle. You got to figure out who owes what, how much they're going to take, and get them all paid. So at settlement, what it's going to look like is having a HUD-1 where you have to be accountable for everyone to get paid in order to convey that property to the new buyer with everything cleared.
Clear and marketable.
So are you getting that information from the credit report?
No, I'm getting a full title report done once I get the listing.
Now who's going to pay for the title?
That's where it comes in having a relationship with your title company. My title company been rocking with me for the last 10 years. I order titles like that, and they know I want the title sent back to me so I can do what I need to do. And I'm going to tell them this is a short sale. Give me the information. Let me fight it out with all of these companies, get all my numbers, and then I'm going to come back. And this is how the HUD-1 should look. And I prefer to be on the HUD-1 because it breaks it down. So I have one right now on 58th and Catherine. The HUD-1, I have it approved from the bank. The bank say, we don't care about gas, water. There's a $3,500 credit card. We don't want to see that on our side. All we want to see is the $94,000 that's coming to us. So the gas, water, and credit card, where are they going to go on the HUD-1?
Should be on the back page.
On whose side? The seller or the buyer?
Should go on the buyer's side because
Bingo.
you know why? Because the seller that will hold up your process. You put it on the seller's side.
Bingo. So when you get a short sale approval letter,
Do some undercover.
it's not really undercover. It's not undercover.
It's called common sense, being smart about it, strategizing. It's not a manipulation. But
Listen, everyone know everything's supposed to be on the HUD-1, correct? Yes, we all agree? Okay. So when you're dealing with a short sale bank, they're kind of narrow-minded. All they want to see is the seller's net. They're going to cut your commission. Don't think you're getting 6. You might get 5, you might get 4. But that's the game you got to play. All right. So once you get your commission, they'll pay transfer tax. They don't want to see no water bill, no gas bill, no fluff that's added up in there. When they give you they short sale approval, it's going to tell you these numbers are what we want to see. So I go back to the title company and I say, hey, this is what's supposed to be on this side. We have a relationship. They know. Dave told us we're going this side. Now, Mr. Buyer, you're agreeing the one that I have on the market is for $115. You're agreeing to pay $115. Your other items is going to go on the buyer side and over there, and it's going to equal the number that I said. My number is $115 for that house, and I just looked at it today. That one has a $6,000. Oh, that was an estate. $6,000 go to the lawyer. $6,000 go to the water. We pay her Visa credit card off of $3,500, and it's like a few city liens, something like that. But I'm getting everything paid. But I worked and got everything taken care of for us to go to the table.
So the buyer is taking care of all of that, and they know that up front.
Right. You have to relay this. You have to talk. You have to advocate on behalf of you and your seller. If you want to buy this house, this is what it needs to look like. Sorry to say, a lot of agents do not understand that. Like, what do you mean? This is what it needs to look like. I thought the price was $94. They have to understand what's going on. But you as an agent, you have to be able to say, listen, break it down to them in layman's terms to get this deal done. Yes.
So the second and third mortgage. So one, do you negotiate with those two and three?
Yep. You have to take care of everything.
I'm saying you're going to negotiate.
Right.
And so also in your negotiation, have you ever said to the second and third, that I want you to release without payment?
Yes.
Because you know what?
You
can release without payment and make a second for the buyer to take care of. For the seller. Because the seller sometimes has something else happening where they can take care of it, but not at that time. So they can be, anyway, it's complicated. But anyway.
So I've had it released before. I had it released 2 different ways. I had a property where it was a first mortgage and a second mortgage. The first mortgage was Aquin. The second mortgage was Bank of America. This is, everyone know with Bank of America and all these banks, how they get in trouble for the CRA credits and they get taxed. Yes. The second Bank of America actually released it for free and allowed me to sell the property and move on.
Right, I should have said that. To be released so that the property can be sold.
It's forgiven, like wiped away. Right. So there's a few different ways.
When I say release, I mean release with the things still, the numbers still there. That someone's going to pay for it after this closing.
I have never had it where they allow you to do it after.
Another one is forgiven where it's taken out altogether.
So I've had it. They allowed this property to be sold, but the second mortgage gave them a promissory note that they had to sell to sign in order to move forward. I don't recommend that.
Promissory note.
Yeah, I don't recommend that because think about it. You're already in a distressed situation. You're losing money. You allow me to sell the property, and then you actually taking on a note that after the property is sold, you're still paying on.
Right.
I don't recommend
I
that.
don't recommend it either.
But some people have the means to do it. I had a guy said, we're having a short sale and don't worry about it. I'm going to bring the money to the table to take care of that second mortgage because he wanted to get out of it and move on to bigger and better things. So things change. You have to just be able to understand it, relay it to your client and say, hey, does this make sense? You want to do it? Yes, move forward. Yes, ma'am?
I'm just trying to clarify everything. So are you saying that the house possibly may only be 50K, but you adding in the debt, and then you're listing it for 94K?
So
You do it that way.
think about it this way. If the short sale payoff is 50,000, the bank say we want out 50, but I have gas, water, and credit cards that the bank is not going to pay. Them other three liens, you're going to say, hey, Mr. Buyer, if you want to buy this property, you have to pay these three liens, and they're going to go on your side of the HUD one. So it's basically like a puzzle. You're just putting the puzzle together to get you to closing.
Now, that's not going to be incorporated into a mortgage. This is money that they're going to have to pay out of pocket at settlement? Or could it be incorporated into the mortgage?
Not a regular mortgage, but maybe a hard money if they have the relationship. But no, you're not going to go to Wells Fargo and say, hey, because they are on it. The same way the short sale bank hawked the HUD one, if you getting the loan, they're looking at, well, what is this right here? But if your buyer say, hey, Wells Fargo is going to pay for this part and I'm going to pay cash for this part, yes, you can do that. It's kind of like if you have a situation where someone is going to pay the contingency gap. You want to know what that is? Yes? No? Okay, a contingency gap. I have a property I just wrote up yesterday for $450,000. The house is only on the market for $399,000. They waived the inspection, they waived termite, they waived everything. The person said, I said, you have a strong offer, just waiving that. I said, the next level, if you want to have a stronger offer, you say, hey, Mr. Seller, if the property only appraised for $425 and my offer is $450, I'm willing to come to the table and give you $25,000. You guys understand that?
Yeah. Yeah.
Right. It's just a way of negotiating. If your client really, I had one during the pandemic, they went from 600 to 675,000. I'm like, you want to pay this? They said, yeah, we want to get out of Philadelphia. We want to move to Delaware to our forever home. They paid it. I won. So you got to know how to negotiate on your behalf of your client and also make sure your client understands this is what's going on. Because it's not just, oh, I got a mortgage for $675. No, your mortgage is $625. So closing cost is $50,000. On top of that 50, you got to put $25,000 cash to give to the seller. So it really depends on, like I said, it's a puzzle. You just got to put the puzzle together in order to get the deal to the table and make sure your client is can understand what's going on. So this is basically a short sale that I did. This is like getting your diploma or your degree. Once you then went through all of the process, and one day you wake up and they get an email that says, here's your short sale approval. It's very detailed. They break everything down. Your commission is not 6%. Your commission is 5%. We want to see a net of 94,000. That's all. They don't want to see nothing else on their side. So when you get to this point, everything has to be to a T verbatim, from this paper to the HUD one, the CD, whatever it is. So when you get one of them, you kind of feel good, like I got another one to the closing table. Don't be afraid to take on short sales. It's a hard thing. So this is what I tell people. If you want to get into it, it's a good niche market. I'm an investor. I've purchased short sales myself. Anyone knows 74th and Lindbergh Boulevard, 19153? Good area, right? I bought a short sale for $80,000. It's worth $225 right now, and I'm getting $1,900 a month from Section 8. Now, 19153 is a high rent area for Section 8. So I actually focus on that area for short sales in Section 8. So
your competition now.
listen. One thing about me. Listen. One thing about me. There's no competition because what's for me is for me is what's for y'all is for y'all. That's why I'm here sharing this information. If you have a short sale, if you're afraid to do it, get the listing. Don't be afraid. I have a company called Short Sales Are Us. You can hire me to come in to facilitate the deal. You can walk away and go back onto your deal. Short Sale Are Us. I'm going to. Khalid's going to make sure you get all my information. So don't be afraid to get the information. Just pay attention. If you hear short sale, okay, let me call Dave because I'm going to bring him in to help facilitate it. You get the listing, you walk away. Once I go to settlement, you get your check, I get paid for facilitating it, and the buyer get to buy the property. But don't be afraid of it.
Does your percentage rate vacillate?
My percentage have nothing to do with you, the listing agent, you, the seller. My percentage is coming from the buyer. Okay? So, short sales is a good source of leads for you to get. There's just a lot of people always buying it. Now, I'm going to take you to the other side. How many people have buyers that want to buy short sales? And what do you tell them? Okay, good. Transparent is good, but we're here to educate. So when it comes to buyers wanting to buy short sales, just like we have to put the puzzle together on the seller side, the buyers have to do the same thing. So a lot of times when someone come to me and say, hey, I want to buy your listing and my client is getting a mortgage. Cool. I go in my whole spiel, I explain everything to them and I break down this is what's going on. I don't think it's for people who's getting like FHA, 203Ks, FHA. Usually a conventional and they have money. The reason why is because like I saw one in Live Rock. Anyone know where Live Rock is at? Yeah, it's a really good area if you want to live up in the county. Taxes is really low. I had two in that area. And the buyer came to me. They came with a really strong offer. I'm like, cool, okay, here, you can buy the property. It was actually an elder couple. It was some debt to it. I said, here, you can buy the property. These are the numbers. This is what you need to do. They said, we agreed to it. I said, also, too, that township needed some UNO things. You going to take care of that? Yes, we will. They was there, cement in the ground. They got everything done for us to pass so we can convey the property. Also, too, when you're doing short sales, make sure you get the UNOs. You have to take that into consideration. Your client is selling a property, they losing money. Do you think they want to pay for that? So who has to pay for it? Exactly. You have to be able to look at everything and convey the whole picture to the buyer so there's no surprises. Yep. Any questions?
So pretty much the buyer's taking on all the additional debt, so they need to like have cash.
For buyers, yes, I would highly recommend. Everyone wants to get a deal. I want to get a foreclosure. I want to get this. I want to get that. Short sales is not it. They need to go look at HUD home stores, one of them first look programs where you can wrap everything all up into it. You can do it there, but not on an open market when you're dealing with short sales. It just don't work.
Would you say most of your buyers, when you're representing the seller, are most of your buyers investors?
Yes. So give you a little insider. Nine times out of 10, I get double bubbles on all my short sales. I have a pool of investors from out of state, out of country. I got a short sale. These are the numbers. You got to pay for this. Most of my guys like to buy and hold. So basically they buy it, fix it up, and they go from there. Most are investors because they understand the price. There's a lot of people in Philly that they know that I get short sales and they always hit me, hey, what you got? This is what's going on because they know it's a quick deal. We can get it done. They know I'm going to have all my stuff together and I can convey them the property.
And the other thing is, a person looking to buy a home for their wife and children, said that a short sale is kind of risky because of the time factor. You don't know when you're going to close, right?
Well, it depends. You speak to your buyer and say, do you need something to move in next month?
I'm saying is, first you got to communicate with the buyer, find out who your buyer is.
Mhm.
But I'm saying many buyers, when they're looking to buy a home in the spring, they're looking to move in the same year.
So this is the thing. When you have a short
I
sale,
mean, that's people who want a residence.
no, think about it this way. I have short sales just ready to go. I done already did the heavy lifting. I got the approved number.
Yes.
If you tell me I want to close, I have the approved
Oh,
number.
we have the approved number.
Right.
But if you're not approved yet, it could be.
Yes, it can be, but that's when. So, for example, from me doing these short sales,
I remember people waiting. I had loans that I would update every 3, 4, 6 months.
that's a
And
mistake.
they would be in it.
That's a mistake.
Not as a builder, as a
Okay.
mortgage underwriter. So they would be in my cabinet, and I would call them up and find out if there's no short sales approved yet. You know, go to the bank and everything. And
All right.
you know what? It would just be going on for forever.
Let me give you a tip. If you're going to do short sales,
So,
okay, you was the
but
underwriter.
now I'm a realtor, so of course I'm going to be more.
If you're a realtor and you want to list a short sale and you actually going through the process and not relinquishing someone else, my recommendation, check in every week. I'm gonna tell you why. We as realtors get paid when?
When they close.
We close the deal. Short sale negotiator at the bank, when do they get paid?
Every week.
Every week. Do you think they're going to keep calling you, asking you, hey, we closing this? You have to. I think my schedule is like every Monday or Tuesday. I'm calling each bank, hey, what's going on? Can we get this done? What do you need? When you're doing short sales, there's going to be a lot of asking for the same documents over and over. Don't argue with them people. Just send it to them.
Yes.
Do not fax it. I like email because I can go back to the record and say, well, I sent this to you 6 times already. And do not be afraid to go to war for your clients. I didn't argue with plenty of negotiators. You're wrong. You're in California. This house is not worth this much. And they do listen. So don't be afraid to go.
So I'm actually dealing with a short sale right now, and it was I'm a newer agent, and it kind of came on the back end. Like we didn't pull title, so we didn't know it was a almost foreclosure situation. So we kind of already had it listed, and then.
But wait, quick question. Your client didn't tell you that they got an Act 91. They got some type of correspondence in the mail. They didn't tell you. Okay, because you can't say that they didn't know.
They weren't upfront.
Okay, there you go.
Mm-hmm. So when by the time we found out that it was going to be, we're going to have to flip this and do a short sale. Anyway, the point of my question was, the bank, we gave them all the documents, but the bank keeps asking for like a closing document, like a CD. That's a HUD. It's a HUD.
Exactly.
That's what we call it these days.
So just to break it down I see we have some, look, a HUD-1 is what they used to use back in the day. It's primarily for a cash deal. You guys, if you're doing regular mortgages, I'm sure you're used to seeing an Alta, which has 2 different versions, or a CD. Just to dumb it down and make it simple, I use a HUD-1 because I can say, Mr. Buyer, this is what your side look, and seller, this is what your. So, right, that's part of your packet. So you said you sent all your documents in, but you didn't send everything in. You have to send the whole package in. You have to send a hardship letter, the taxes, bank statements, a contract. So the CD or HUD-1 is just as important as the agreement of sale. Because honestly, they don't even look at your agreement of sale. They go straight to the HUD-1 and they go straight to line 700 where it says first mortgage provider is receiving this amount. They don't look at nothing. No, they look at your commission. 2 places they look. How much money they getting and how much they paying you. 9 times out of 10, they're going to say, hey, drop that down to 5%. Okay, so with the 5%, what is the net? So the most important thing when you speak to the bank is, what is the bank is going to net? That's the biggest thing once you submit all your docs. And once they come back with that net, if you feel comfortable saying, you know what, that's a good number, then you have to get back out there and market that property saying, hey, this is the net. This is what I need in order to close the property.
So before you market the property, are you like kind of doing all the groundwork, like ordering title, all that stuff, where you like?
Absolutely. When I get the listing, I have a team. So my assistant is already sending hitting the title company up saying, hey, we need a title ran for this. They deal with me all the time. They know I close short sales, so they're having a problem running everything and saying, here, Dave, here's everything. How many people know how to read a title?
Hey, so wait.
Listen, y'all. Listen, hold on. Wait. Listen, y'all. We in this business. I've been in this business a long time, and you have a lot of new agents coming in. It's certain things, it's kind of like when you're in college, is a prerequisite. You can't depend on the title company all the time. You have to be able to get the title and look at it and say, oh, we got an issue here. Ask someone that you can I talk to you for a minute? Ask the title company. You sending them money. They should be able to tell you this where the problem at, this where the problem, this where I'm at. So when they give me the title, I look at it. All right. And then
So are you asking for a bring down or a full title? Are you asking for a bring down in terms of the title?
when I say a full title, I want everything that's owed on a full title. The reason why you want a full title because you need to know all of the debt on this property. All of the debt that need to be paid off in order to convey this property. You want to know, is your tools to get this done? So once he sent me the title, I'm looking at, all right, and I take a pen and paper. All right, we owe the mortgage this, the gas company this, the water. Why you didn't tell me about this $20 American Express bill? You forgot? All right, we got to put that on there. And then I add everything up. So once I add everything up, that's our marketing price. And also, just to let you know, when you first put it out there, I don't care what number you put it out there for. I just want you to get it out there, start marketing it. And the banks do check that you put the property in the MLS and it's been marketed, I think, for 7 to 14 days. They check. They don't want to just see that you got a short sale and you gave it to her to sell and no one ever saw it. I've had times where they took the actual listing and made it go on to zoom.com for 7 to 14 days, even though I had an offer. So it's a lot to take in, but as you start doing, you start knowing certain banks. All right, I know they're going to make me put it on Zoom. Cool. It sit over there and go from there. But you just have to work these deals. But is when you have a few of them, I think I got like 4 in my pipeline right now. But I'm always working them. And then I'm an investor. I buy them too. If you have investor clients, they're going to love you when you bring them short sales that they can buy, fix up, give you the listing back, and go on. It's another stream, another pipeline. Any questions?
And of course, they're all sold as is, right?
You want to get the roof fixed before we sell it? Huh? Or you want the toilet fixed? Huh? Yes, all short sales are as is. You're not asking the bank. Matter of fact, I'm not even accepting your offer if you send me an offer talking about, can I do a home inspection? Yes, you can do a home inspection for information purposes only, because I'm not arguing with no bank about a broken toilet when I know they're going to give me the ringer on everything else. So no, it's as is. You have to, the importance of it, of having a good listing agent, but also having a buyer's agent that understand what they're buying, how they're buying, what they're going to get.
He doesn't want me to talk.
No, you have a question. Go ahead. You have a question.
No, she asked about ask is, and it came to mind. Banks do fix up houses, but they're called REOs. When they're selling their bills, they don't. They own the. Oh.
That's
so you get your REOs.
That's a whole other thing. So if you ever have anyone has an asset managed account where they get the listings?
I do.
Okay. That's the REO account.
Yeah.
If you get in plugged in with it, they send you. So I work with one, and they buy in bulk. So they may send me 20 properties and ask me to do CMAs. I give them the CMAs. They may come back a month later and say, hey, we bought this property. When they buy the property, they say go by the house to see if the person is still in there. I usually go by morning, noon, and evening, 2-3 times. Someone in there. I go knock on the door. Hey, your property been bought by XYZ Capital. Do you want to leave? I can offer you cash for keys. Yes? Okay. $2,000 when you leave. I give it to you, you go. No? Okay, I go back to the REO company. They're not leaving. Hire the attorney. We do what's called not an eviction. We do what's called an ejection. We do the ejection. I show up with the sheriff. They kick you out. I clean the house out. I put it on the market. That's a REO property. Short sales are called pre-foreclosures. Trivia question. Pre-foreclosure. Who owns the house? The bank or the seller? Not you. Pre-foreclosure is a short sale. Who owned the house? The bank or the seller? Exactly. So when you buy foreclosures online, it has been foreclosed on. The seller do not own the bank. The mortgage company. When you're dealing with pre-foreclosures, you're dealing with you and me, the actual person who owned the house, where they can do the transaction before it's foreclosed on. However, they need what's called a third-party approval before they can sell.
And who's the third party?
Who's the third party? Exactly. Yes. So you can say, Dave, I want you to sell my house and I want $300,000 for it. But you owe $500,000. Okay, I got your offer for $300,000. You want to sign in and sell it? Yes, right? I still have to take that offer to the bank and say, hey, will you accept this $300,000? Remember I talked about net?
Yes.
That $300,000 is not a $300,000 net. Transfer tax, commission. They want to know what is the net. That's all they care about. Yes. Mm-hmm.
I had one like that a few years ago. I have a friend of mine who works for Sinlar.
Yep, Sinlar is a servicer.
Yeah, so she's very high.
It's actually here in PA.
Yeah.
Yep.
She lives in Williamstown. She's very high up with them. So I said, listen, I've had my real estate license for 20 years. We've been friends for 15. I said, throw my name in there. Get me a listing. So she did, and I got a listing from it. And they wanted, this is about 5 years ago. The property was probably worth about $90,000.
Mm-hmm.
Right. So I told them I did my report right away. So I guess they just wanted this thing off their books.
Mm-hmm.
They called me up and they said, list this thing for $40,000. No, $30,000.
Wow.
So I was like, what? I'm like, all right, you're the boss. So I went to George, the owner of my company. I said, George, I don't care what you got going on. You're buying this house.
Oh.
He goes, what are you talking about? So I showed resale on it was probably about 180,
mm-hmm.
right? And it needed about 50,000.
Mm-hmm.
So all the bids were coming in, and because it was the auction kind of thing, and I made sure his bid was the last one in at 1,500 over what the one was, which he told me only go 500 over. I called him cheap, and I said you're going 1,500. So he ended up getting the house, getting it fixed up, and then when it came time to sell it, he said, "You want the listing?" I said, "Absolutely not." He goes, "Why not?" I said, "I don't know what your contractors did," because he had a friend of his he was doing it with. I said, "I don't know what your contractor friends did." I said, "So I don't want my name on that property a second time, because someone will look, if something happens, they'll see that I was the first listing agent.
Mm-hmm.
I want nothing to do with that." So he ended up making probably around 50.
Yeah, it's some good spreads, long if you understand it. So you see how that went in short sales. Just take and throw logic out the window. So that didn't make sense, but that deal happened, right? I had a deal one time. I did a short sale, and we was at the settlement table, and the seller said, "The bank told me I'm gonna get 20,000. I was only selling the house for 30." Listen. So I'm like, okay. So remember when I told you we have to get approval. So that HUD one is very important. Once you get it all, you send it over to the bank. They stamp it and you get it back. And they say, this is what it needs to be.
Yes.
When I got it back, it said, cut your commission to 5%, give the seller $20,000.
It did.
She got a check for $20,000.
It was a short sale.
Yes.
Did they say why?
I don't ask why.
Yeah, right.
So we could do it.
But actually, I have not saw it was called a short sale incentive. So back, I've been in business like 07, 08. Back then, there was a lot of weird stuff going on. Banks was getting in trouble for doing bad loans. Anyone know what CRA is? Shot, what's CRA?
The Community Reinvestment Act.
CRA is the reason why you get a lot of these low to moderate income programs.
Yes.
20,000, 10,000, because these banks get in trouble for doing things the wrong way, not lending in certain areas, bad mortgages, things like that. Every year is something going on. I'm sure you heard of Wells Fargo, Bank of America. All of the big banks get into it, but they make so much money when they give back, it's pennies, but they're always getting in trouble. So back then they was getting in trouble and they was doing they was actually sending letters to people who was in default to say, if you do a short sale, we'll give you $20,000. So it was a short sale incentive.
That's how she got that.
Right. So she was able to get $20,000. I have not saw a lot of them lately. Short sales, as I said, just throw logic out the window. A lot of the stuff they doing now, I just try to work the deal and get it through. Work it. No, they're taking a loss. But it's a write-off to get it off their book and they can continue lending. So it's not really a loss. And also too, so short sales, anyone know what a tape is of mortgages? A tape of mortgages, if you have a lot of money, you can buy 500 mortgages. In that tape, they have big, little, small, some performing, some not performing. Investors, if you have enough money, you can invest in it. So when you get a mortgage, anyone mortgage switch from bank to bank to bank?
Yeah.
Right. Okay. It's bought by an investor. I don't know who the investor are, but they have what's called a servicer. Sinlar, Bank of America, Wells Fargo. And that investor actually make the decision. So this one that I'm dealing with now, on Catherine, I talked to the negotiator. She was very nice. Most of them are assholes, but you got to work with them. And she was like, yeah, I understand. I'm sending comps. I'm like, how are you asking me $94,000 when I can buy a house down the street that I can live in for $93,000? So the negotiator was like, Dave, I understand, but the investor's saying this is what they want. That investor could be me and you. And you can say yes or no.
Yes, because you know what? I know what you're saying now.
Yeah. So it's just, you just have to work the deal.
They're the last decision maker.
Yeah. It's a good way, a good source of business. If you're an investor, it's a good way to get deals. So that's my presentation. Anyone have any questions? He's going to make sure everyone that register is able to get my information. Okay?
So guys, this is just to expose you, okay? Expose you to this knowledge. They've been doing this for a long time. You know, they give y'all a wealth of knowledge, but don't say, darn, I didn't know all of that, so what am I doing? No, he's been doing this for a long time. In this business, everything works. Whether it's short sales, or whether it's probates, or whether it's expires, or whether it's physicals, everything works, okay? It's just about being a master at one. I think sometimes a lot of us go from lead generation to lead generation to lead generation, and we skip and we're really shallow in it. We never go deep on one of them. So again, I want to thank Dave for giving us our topic for next month. We'll have Ken come in and teach us how to read.
Listen, that's very important. Like, I've been in the business a long time. I see a lot of agents that come in and they kind of just on the water. You got to go deep. You got to be able to read a title and know what's going on with it. You got to be able to read a HUD-1, a CD. Most of them just give it to the title person and let them do it. And I'm licensed in multiple states. I learned in PA and I moved to Delaware and I bought a new construction. And I'm telling them at the table, wait, let me see that. They like, you know how to read this? I'm like, yeah. If it's a title, let me see it. They was just amazed at everything you do, but different states work differently. Delaware is an attorney state. I love it. So you just learn how to read this stuff, dig deep into the business. This is only going to make you better.
With the title report, now from a conveyancer standpoint or transaction processor, I used to like look at a certain page that showed whatever old mortgages were still outstanding, or any liens or whatever. Are there any other parts of that report that would be really considered significant?
Well, next month, we're gonna have Ken come back and run it down from A to Z.
Yes.
Okay.
Yeah.
So we kind of know as far as what to look at and what not to look at.
Do you help with old mortgages and getting releases?
I believe the processors are part of that.
That's a part of the business that people shy away from. Yes. When you do this, sometimes you have old mortgages that you have to get releases from, because back in the day when they mortgage was over, they got a coupon book.
Yes.
Correct?
Yes.
And usually you had to take it down to City Hall to have it recorded, but no one did that. So now if you're doing a short sale or for any deal and you get an old mortgage, you should know how to get that release. In Pennsylvania, in Harrisburg, they have the Commission of Banks, something, where if you tell them the bank, they can tell you who bought the company, and then you follow back up and contact them to get your release.
There were some mortgage companies that had long been out of business. I mean, there were some like very old ones.
That's how you follow them to find out who bought the debt, who has the
You had to
information.
actually like Google and go online and look up some of them just to see what the trail was.
Yep.
And then the similar name thing, sometimes mortgages go on title reports. I've had my experience of working, I've had title reports where it had, let's say Teddy Ashby, she owes $94,000 to XYZ Bank. And that's not me. It's not me, Teddy Ashby.
Right. And
So you have those sitting up on the title report. And you know the title company from this side.
yeah, I mean, in this business, as you guys know, this
Not national integrity, they don't listen.
right. Right. You guys know in this business, there's a million and one things that could happen. Okay. So we just want to try to be as educated as possible. And this is one of the main reasons why we do things like this. Okay. So again, this happens the last Wednesday of every month. Okay. And for our sponsors, I just want to introduce them one more time for the people who came in late. We have Ken Murray from National Integrity Title. We have Drew Smith over here from Trinity Solutions, which is our credit partner. We have Gia Denvers, right? Denvers, and she's a transaction coordinator. And then we have in the back Shad Hammonds, who's our mortgage sponsor. I think I forgot anybody. Okay. All right, guys. So we're here till 3. Please stay, mingle, eat up all the food, please, and come back next time. You're welcome.